Welcome to the Future of Fintech webinar organized by the Singapore Global Network. Thank you once again for taking time off your busy schedule to attend today's event. So my name is David. I'm from the Singapore Global Network, and I'm based in the US West Coast. So for those of you who have not heard about SGN, the Singapore Global Network for short, we are a Singapore government agency which is building a community of Singaporeans and friends of Singapore all over the world. So friends of Singapore are people like some of you here today. So people who are not Singaporeans, but you have that affinity to Singapore because maybe you were based there before, you studied there, you worked there, you were even born there, or you used to be based in Singapore. So coming from the Singapore government, we want to continue that engagement with you as long as you continue to have that interest and the affinity with Singapore. And how we do this engagement is really through webinars such as these, where we hope to keep all of you updated on a professional level about what's happening with the SGN community in the US and of course, Southeast Asia and Singapore. So for today's session, we chose to focus on FinTech. As many of you know, FinTech has been making the headlines, not just in Singapore, but also around the world. I think if you've been looking at the various sectors, financial sectors affected by COVID, you would see that financial institutions, many of them have been doing well despite COVID. So in Singapore, the MAS, the Monetary Authority of Singapore, just announced earlier this month that despite COVID, the fintech industry in Singapore is growing strongly, attracting close to $480 million in investments in just the first half of the year. So this is making us on track to exceed last year's total investment of $730 million. But as you know, typical Singaporeans, we are not resting on our laurels. We want to do better. So in fact, MAS further committed another $180 million to the fintech industry to move us closer, one step closer towards our vision of being a smart financial center. So with this in mind as a backdrop, we thought this would be an opportune moment to bring together some of our exciting fintech leaders in the SGN community in the United States and also with Singapore to bring them both together and have a deeper discussion on their perspective of the sector, both in the US and in Southeast Asia. So I'm really super grateful and appreciative of Imran, Kelvin, Anand, and Neil for setting aside time to be with us today. Now, I'd like to pass the floor over to Imran, your moderator for today. So Imran is a dear friend of the SGN community. He is also the general manager and head of payments platform for Silicon Valley Bank. He has extensive US, Asia, and Europe experience, having been in leadership roles at Verifone, NXP, Lentic, and Infineon. So we thought that his cross-border leadership experiences, coupled with his role in an exciting financial institution such as SVB, makes him a perfect moderator for today. So without further ado, Imran, please.
Thank you, David, and thank you, SGN, for hosting this event. We have a very distinguished panel today. I'm expecting a very informative discussions on the trends that are driving innovation in fintech, especially in the post-COVID world. As David mentioned, I'm the GM and head of payments at Silicon Valley Bank. At Silicon Valley Bank, we are focused on driving innovation economy. Majority of the companies that went public in 2019 banked with Silicon Valley Bank. And we have a very entrenched relationship with fintech. So fintech is very core to our business here. I'm also very fortunate to have lived and worked in 3 different continents, Singapore, Germany, and USA. And I'm very passionate about reducing friction and use of technology. I believe if you reduce friction for your customers and delight them, you'll always be successful there. So without much further ado, let me ask my honorable guest panelists to introduce themselves. So starting with Kelvin. Kelvin?
I'm Kelvin. I'm the co-founder of Funding Societies. We're the largest SME financing platform in Southeast Asia, licensed and operating in Singapore, Indonesia, as well as Malaysia. So we basically specialize in short-term financing for SMEs and complementing what banks are offering. So banks focus on big, long, secured loans. We kind of do the opposite, specializing in small, short, unsecured financing in the form of term loan, trade finance, as well as microloans. So in the last 5 years of existence, we have given out slightly more than 1.2 billion US dollars of loans cumulatively. And that our goal and vision is to really serve the SMEs community across Southeast Asia in the next 2 years. We are a Series C company backed by Sequoia as well as SoftBank. I think my own professional career before this was in primarily consulting. So started my career with Accenture, McKinsey, followed by KKR and Harvard Business School in the US.
Excellent, Kelvin. Glad to have you on the panel today. Next, let's go to Anand. Anand, please.
Yeah, hi everyone. I started off, and I'm still with largely consumer finance and consumer banking space for most of my career. I started off with a global bank at Citibank, coming right out of the graduate program, and was with the city for almost 27 years. Half of it was overseas and half of it was in the US here. My association with Singapore was that I was the country head for payments and lending in the early 2000s. And later on, I spent a significant amount of time in Malaysia. So I have a strong affinity towards the Asia region. And later on, in the last 2+ years, I've been with SoFi, which is a leading fintech provider here in the Silicon Valley. And I was responsible initially for the 2 large lending businesses that SoFi has, student loan refinance and personal loans. And lately, I've been trying to shape the international growth strategy for SoFi, and we're working on it as we speak. So,
thank you very much. Thank you very much, Anand. Very impressive career. And next on our panel is Neil Davidson. So Neil, please go ahead.
Imran. Hi, everyone. It's a pleasure to be with you today. I'm grateful for the invitation to participate. I'm one of the founders of Coda Payments. Coda is a super specialized online payments company headquartered in Singapore, which is where I lived for many years before relocating back to the US last year. Coda helps publishers of games and other digital entertainment reach and ultimately monetize their users in emerging markets where low card penetration is a barrier to doing so effectively. We offer 3 main services. We have one service where we act as a pure PSP, allowing publishers to collect payments on their own website using our portfolio of 250 alternative payment methods across 30-odd countries. Second, we operate a consumer-facing portal called Codashop.com, where 15 to 20 million customers come every month to purchase a variety of digital entertainment products. And finally, a service which allows major e-commerce platforms like Lazada or Shopee or Tokopedia to sell that range of content to their users. Our clients include Tencent, Riot Games, Match.com, Garena, Netflix, YY, NetEase, and a number of other really great brands that we're happy to work with.
Thank you very much, Neil. I would like to say that it is unfortunate that we have such a heavy human loss and suffering that this pandemic has brought. The human factor involved cannot be emphasized enough. But every chaos or disruption also creates opportunities, and this one definitely has created an inflection point. I see there are 4 main trends that are coming out of this inflection point. Number 1 is the digital transformation across the businesses and channels that has been expedited by at least 3 to 5 years. And from FinTech's perspective, that means faster shift towards the digital channels. Second, consumer adaptation. Simply because consumers were used to doing things certain ways, and since it was working for them, they did not bother to learn new and often better ways of doing things, even if they were available to them. Simple example is use of currency notes. I mean, I know Singapore is different, but in US, we still have a lot of currency notes being used in the rest of the world there. So moving towards the electronic payments, going to the mobile wallets versus physical cards. Order ahead online shopping, online loans, online banking, bill pays, contactless checkouts. These are all the examples that are coming from consumer adaptation that consumers are moving towards. Then the third part is the innovation part. There are new use cases being created, modeled on the post-COVID consumer behavior that are going to become norms. They're going to be here to stay. They're not going to go away. These new cases are already driving a number of innovations there. Fourth part is speed and analytics. Requirements to have the transactions done instantaneously has gone up significantly. Faster, secure, and reliable payments will dominate the market. And clients will demand more visibility into the journey of the payments, increasing the demand for data analytics, AI, and machine learning there. So digital transformation, consumer adaptation, innovation, speed, and data analytics will be some of the topics where our panel members will be sharing their thoughts about in their particular domains. So let's get started with our Q&A session. We have a number of questions received from the audience also that we have incorporated in our webinar today. I will like to start with Neil. Neil, as I was describing, COVID has brought a lot of changes to our lifestyle. It has also expedited digital transformation. Tell us how this digital transformation has an impact in your domain and how it has impacted the consumer behavior as well.
Sure. I can speak to a couple of trends that we've observed, which are really about spending behavior of consumers in the emerging markets that we operate in, which is principally Southeast Asia, but also South Asia, Latin America. We've seen, first of all, as I think you would expect, a meaningful sort of uptick in usage of our platform, which is primarily enabling purchases of in-home digital entertainment. This could be games, music, video streaming, sort of that whole gamut. I think by now it's pretty clear, and if you look at the sort of earnings reports that have been coming out of publicly traded companies that are in these categories, all of them have been incredibly strong, representing a shift in disposable income away from things like going to the movies or going to the shopping mall, towards these sort of activities that can be undertaken at home. I think there's sort of an open question of the degree to which this is accelerating the long-term secular trend towards away from live cinema and towards Netflix and other video streaming services, versus the degree to which we'll see a snapback once things get back to normal. My only comment on that is I think that the longer things remain abnormal, probably the less of a snapback we will see to what was sort of ordinary behavior historically. The second thing I can pick up on, which was sort of embedded in your introduction, is kind of a shift in the way that people are making payments. So one of the value propositions that we offer at Coda is this incredible portfolio of 250 payment methods that we support globally so that we can enable people that don't have a credit or a debit card to pay. Historically, one of the really important categories of payment methods that we support is cash payments at retail, making it possible for customers to walk into a 7-Eleven or a Cheers and pay cash for a purchase, which is obviously convenient for customers that don't have a bank account and have a card. We've seen a dramatic drop in particularly sort of, I would say 2 or 3 months back when the pandemic was at its peak in Southeast Asia, for the obvious reasons, people not wanting to walk into a shop, maybe not even being allowed to, and seeing those transaction volumes not disappear, but seeing them sort of migrate to other digital channels.
That's very interesting. People, as I think we're all noticing this analog to digital transformation, going from money towards the digital. And as you said, the unnormal staying longer and becoming normal, probably this will become the norm that we are experiencing right now. Anand or Kelvin, would you like to add something to what you just said?
The only thing I would add is, SoFi has always been 100% digital business. So the impact, the overall impact of the business has been less because people have always been coming and applying for whatever products we provide, either through the phone or through the app, or on an online website. So that flow has not changed, but intrinsic to the business, we have seen some shifts. So for example, people have more time, they're not commuting, they're home. So they're obviously spending a lot more time in areas like investing, and our investment activity in the invest business has grown up significantly. We have seen a lot of inflows into our invest business, and we have seen activity in terms of trading go up significantly, right? Number two is because interest rates are so low in the US, people have started, the home buying has become quite an active, even though people cannot visit, people are buying more homes and the demand is very high, and hence the mortgage activity is very high. So much so that, we have to be selective in terms of how and whom we pick in a current credit environment, which is a little bit of a flux, right? Given the unknowns a little bit. And the third piece is in the lending business, for example, and in the student lending or student loan refinance business, the federal government has allowed deferment of payments simultaneously when the COVID situation kind of came up. So in true honesty, the credit eligibility is, the score, for example, is historical, is old. It's not reflective of what the current payment capability is. So I think there's a lot of things that we as a business have to adjust within our risk department, within our credit risk parameters that we have actively been involved in terms of figuring out how to augment traditional credit policies. And we have done that very successfully. So these are intrinsic to the business and consumer behavior, but overall to the business, we have done very well because the consumers have been coming online before and they continue to come.
Maybe to add on two observations that are quite specific to Southeast Asia. So I think what Neil and Anand said are very spot on in terms of credit risk, in terms of digitalization, so and so forth. Two interesting, and of course, increase in risk, but pockets of opportunities. I think those are very accurate, and that in the short term, it can be seen quite a bit turbulent, at least from a financing side, given that there's quite a bit of uncertainty. But actually, we see that on the overall longer term, the trend is actually pretty strong and positive because of 2-3 reasons. I think in Southeast Asia, number one is that in Southeast Asia, the fintech space is relatively young. So the earliest fintech companies, we are among the first batch or earliest batch of fintech companies, and we are only 5 years old, as compared to say Anand from SoFi is almost 10 plus years old. So I think one major shift is that the government institutions are starting to see that fintech players as a good channel to work with, to serve and reach the masses or the SMEs. So one example is that previously the government regulators may see that as, hey, fintechs being unstable or not sure, being young, let's allow them to operate, but let's regulate them and keep them at a side for now and see how things go. Interestingly, in Malaysia, the Malaysian government has created a fund called the Micro Investment Fund, whereby for every $1 that a crowdfunding platform lend to your SME, so every $2 that a crowdfunding platform lend to your SMEs, the government will co-lend $1. Or even in a Singapore perspective, government is slowly trying to expand some of the programs that previously was only allowed for banks to participate. They are starting to consider fintech companies. So this shift in attitude, I think, is actually very important, and I think it will help over the longer term. I think the second part is that previously, a lot of fintech companies, even with a good credit performance, is always seen with certain level of skepticism because, hey, your default rate is low because we have had we have experienced one of the longest bull run in our market. But I think in this particular time, it has a lot. The COVID crisis has kind of differentiated some of the better platforms versus the smaller, perhaps less well-managed platforms, and allowed some platforms to create a track record through COVID period. And I think that's very powerful as some of the fintech companies evolve and mature. And I do reckon that in the longer term, that track record will actually help some of the players become stronger after the crisis. So in short, I think in the short term can be a bit, there is some elements of uncertainty, but in the medium term and longer term, we do think that the trend will actually support and further scale up the fintech sector.
Very, very interesting perspective, I think, from the US perspective and from the Asian perspective as well. With increased activity in loans and amazing program with a dollar-to-dollar match. So we'll see a lot more innovations there. So in this new world, the data is becoming the new digital currency. What are the new ways of leveraging this currency to offer better services? And what role AI or machine learning can play in that stuff? Anyone wants to take this?
I can take it initially. I mean, we do use, being in a direct-to-consumer business, we have to use a lot of information and data to make unsecured lending decisions, for example, right? In this space, what we try to do, again, Imran, to your original point, is we try to reduce friction as much as possible through the process. And that's why our members kind of, like us very much, because our ability to take the application and process it is as smooth as it can be, and we try to refine it every day. So in the process, we can segment people to say who is very well established, who is moderately established, who is less established. And for some of the very well established people, when we do inferences like, we have to evaluate whether the income you state is the true income, whether you are the person who has applied, because there could be a lot of fraud in online applications. Some of that, we use a lot of third-party and information data that comes through in ID verification, income verification, that we don't actually have to cause a friction to the consumer to ask, because we know with high degree of precision that this is accurate. And so data is used in a lot of ways in our processes to simplify the process and make it easy for the consumer to get a decision as quickly as possible. And speed and choice are some of the key, aspects of what we pay attention to in terms of our offerings. So I'll leave it at that and let you guys address other aspects.
Kelvin, Neil, anything to add?
For us, we think about data in two ways. I think number one is really sales analytics. How can we give out money better? How can we reduce our cost of customer acquisition better? So identifying segments that will need money at this point in time. So being at the right place at the right time for the right folks, right? I think that's extremely important, because one of the key challenges when it comes to fintech is how do we make sure that we reduce our customer acquisition costs so that we have a closer path to profitability. And I think that's extremely important. That's number one. The second part is really credit analytics, which is what I think most people would spend a lot of attention. So the first part is to give out money. The second part is to take back money, right? Because giving out money is easy. Taking back is not so easy if you are giving to the wrong folks, right? So for us, making sure that, and we think about it from two angles. I think number one, three angles. Number one is really, of course, who to give money to. Number two is how can we improve collections. But perhaps the third part, which is less studied, is how can we reduce false negatives? Because if we think about from a credit officer's perspective or the data officer's perspective, rejecting is easy, but how can I make sure that we don't wrongly reject customers and we reduce that more and more over time? And I think especially when it comes to the SME financing space, it faces a bit of a unique situation whereby the data availability in Southeast Asia is actually not as high as compared to consumer, because SMEs by nature are less digitalized, and for the digitalized information, frankly, they're not as predictive in terms of overall risk. For example, social media can be quite indicative of the identity of the directors or owners of the company, but that may not actually be as correlated in terms of ability to repay of a business that the business owner owns. So to us is how do we make sure that we combine both both data when it comes to credit scoring, but also how can I digitalize some level of human intuition so that I reduce variance and biases from humans, so that I can reduce content from humans when it comes to underwriting, such that over time, humans just have to look at exceptional handling rather than being a bulk of the overall underwriting. So to us, it's something that we have been constantly experimenting and evolving along the way.
Great, excellent. So this next question actually came to us from one of the audiences. What are the big new business opportunities that this inflection point are getting created in the fintech? So any thoughts about new business opportunities?
And I was thinking of one, right? I mean, this is related to my earlier statement. For example, there is a lot of activity in the home buying space in the US. I mean, I can talk to the US more because I'm on this side right now. So hence our mortgage activity and the industry's mortgage activity is very high. For the first time, we are seeing that people are actually not going and seeing the house. They're taking a virtual tour, and they are putting a bid because the market is so hot. And this was something I read over the weekend, and I saw that people are actually bidding after they see the virtual tours, and this was never before, right? So it might open up a new avenue whereby the better and better you get at producing virtual tours of your homes, the probability of you being able to sell homes easier and at a higher price might be an opportunity, is what I'm thinking. Especially, I think you're seeing here that there's a lot of migration from the cities to more in the suburbs in terms of home buying right now. And there are a lot of markets that are very hot in terms of, home sales. That's one area that came to my mind.
Definitely, I would say AR, VR is going to play a big role in all kind of shopping. We already have seen some apps where you trying to buy the furniture, they place it in your living room so you can see how the color matches and all this stuff. But I think we are at a very early stage. I think it's like, when we used to have those modems with 12 keys or something, not smartphones. So we had that version of, and you used to text pressing the same button 3 times kind of stuff, and moving shift towards the smartphone with iPhones and Android phones. So I think from the AR, VR perspective, we are in that age. We are at the very early cycle where we're just scratching the surface. And from my vantage point, probably in the next 3 to 5 years, we'll see much more AR and VR getting incorporated in products and services there.
Right.
So Kelvin,
the mortgage process is still so archaic and so old and so paper cumbersome, right? It's ripe for disruption, actually, if some of these steps take into being, and you might be able to offer it in a different kind of process, or interject in between.
Sure, absolutely. Anything to add, Kelvin or Neil?
I would just say one thing, which is I think that a lot of innovation in fintech over the last sort of 5 years has really been focused on the consumer. And I think that there's a lot of opportunity. I'm glad Kelvin's on this call. I think serving small businesses, small businesses really labor or have to grapple with really archaic tools to manage and grow their businesses. I think about transactional banking. I think about payments, including foreign exchange. I think about insurance. These are all, I think, acute pain points for small businesses. And I really look forward over the coming years seeing new companies emerge that try to build products and solutions, building on what we've learned serving consumers and users for small and mid-sized businesses.
So Neil, based on your experience in Asia and Singapore, are there any specific fintech trends that you're saying which are specific to Singapore and Southeast Asia, and Singapore being the financial hub? And how can Singapore position itself to be in the leading position in the world from that perspective, from alternate payments perspective also?
Well, maybe let me answer the first part of that question. One of the most interesting things that we've seen over the course of the last few years in Southeast Asia is the emergence of Grab and Gojek as drivers of scale in fintech. So, you know, we all kind of know and think of these companies as being around transport and ride hailing, which is obviously the core of what they do. But I think both companies realized relatively early on that achieving scale in that vertical gave them a tremendous opportunity in financial services. And I think they've both done a really impressive job in kind of running with that opportunity. In Southeast Asia, in the emerging markets of Southeast Asia, so I exclude Singapore, there's been an adoption, a widespread adoption of mobile wallets over the course of the last couple of years, which is really extraordinary. Before starting Coda, I used to work with telcos in developing countries, helping them to plan and roll out mobile wallet services. They almost all failed. They're incredibly challenging to get right. Normally you fail after spending a couple $100 million in the process. The ride-hailing firms just realized that because they were transacting with users once, twice, 3 times a day, that was a way to create stickiness and velocity kind of within a new payments platform. So GrabPay and GoPay now have many users across the region, and those wallets and the infrastructure behind them then becomes a platform to offer a range of other financial services, you know, whether that's insurance, credit, or interest-bearing savings, or investment products, or whatever. You know, some of those products will ultimately be created by regulated financial institutions, but they'll be distributed by Grab and by Gojek, and I think that's going to be a source of incredible value. So that's been a really interesting trend that we've been lucky enough to have kind of front row seats for.
Interesting.
And another extension to what Neil said is, you know, we also see that tremendous opportunity for especially the younger generation to be doing a lot of investment activity on the mobile, because nobody wants to go to a traditional way of you know, brokerage or a robo investing kind of opportunity. So I think on that side also, there's a tremendous opportunity. I mean, in line with that, we recently announced that we acquired in Hong Kong 8 securities, and we, you know, obviously there's a tremendous potential for us in the region to kind of be able to leverage that, and that's one of the areas that, especially in the younger segments, it's going to be quite strong in terms of demand over a period of time.
Actually, we're really excited that SoFi is coming to, we see SoFi coming to the region. In fact, we do hope that it's a trend for the other players. One thing that Neil mentioned, which frankly I have certain second thoughts, is that I wonder, so I do reckon that channels when it comes to Southeast Asia is extremely important, because Southeast Asia is such a fragmented market. So if you're only in one market, in 2 markets, frankly, a lot of fintech companies will probably not do as well. Unless the market that you're in is called Indonesia, then you have a pretty good critical mass. If not, if you're starting from Malaysia or even Vietnam per se, it's actually quite challenging for you because you can't hit scale and to become profitable. But whereas to the extent of Grab, Gojek having that distribution channel, I think that's very powerful. One thing that I personally wonder, and by the way, I do like Grab and Gojek and use them very frequently, but I wonder to the extent of share of wallet, given that not the share of wallet of how much people use a Grab Pay or GoPay for transactions, given that the share of wallet may not be as high, to what extent it actually provides as much insights to a particular consumer in terms of providing services to them, or how sticky would that be, especially after COVID, because most of the players will have to push towards profitability, and hence, interestingly, some are even more expensive than traditional taxis at this point in time. To what extent will that actually continue to create stickiness? And I would love to have continuous subsidy to pay off some of my rights as a poor fintech founder. But but it's something that it actually creates a bit of open question and I wonder in terms of overall the evolution of fintech in the future.
Kelvin, I mean, zooming on your space, which is crowdfunding, how do you compare USA versus Europe and in Asia?
So I think financing is a very localized business, and that the progress, the path, as well as success and failure of the space is very much determined by very specific local factors, right? And initially, we have quite a few hypotheses in terms of what drives it or not, on each of the market. But I think one of the articles that I think summarizes the drivers very well was published by BIS Quarterly Review, whereby it highlighted 3 key factors that determines the success and failure of, or even the progress of the market. And that I see has actually impacted the progress of each of the region. So the 3 key factors, market factors are: number 1, GDP per capita. So the higher the GDP, the more funds is available towards funding, towards investments, towards lending, so on and so forth. The second one is learner index, or basically a measurement of banking competition. So the higher the competition, the less likely fintech will be successful, so on and so forth. And the third one is suitability of regulations. So I think it is not about too light or too strict, it's about suitability of it. So I think Southeast Asia has been quite fortunate because it came to the market, because the fintech space kind of started a bit later compared to, say, China, Europe, India, and US. So from a regulatory perspective, it actually has benefited quite a bit of hindsight benefit. And from a regulatory perspective, actually Southeast Asia is very favorable when it comes to fintech companies. In fact, some see it as a way to drive financial inclusion, and not just in the form of public relations or PR press articles, but actually genuinely believe that this is a key path towards it. And I think from a banking competition perspective, I think banks in Southeast Asia has among the highest ROE in the world. And the competition level is actually relatively low, which has created an environment whereby combining with either the high GDP per capita in Singapore or a fast increasing GDP per capita in the rest of Southeast Asia, that has created a very conducive market for fintech credit. I think compared to, and my outside in view, and great for Anand and Neil to chime in, is that in the case of China, the strict or perhaps slightly late but draconian regulations has actually killed, seriously damaged some of the fintech players in China. I've seen some players, hey, when they listed the company, the price was this. 4 years later, their financial performance has quadrupled, but the price is still this because of the regulatory impact. And I think compared to, say, US and Europe, I would imagine the banking competition is a bit higher because there are a lot more fintech companies in the market, and which push up the competition and makes it a bit harder for individual companies to progress. And of course, there are also specific company-specific factors that drive the progress and results of each of the fintech players. But we'll be keen to hear how Anand and Neil think about it.
I do think that Southeast Asia is a significant opportunity. And I do think that Singapore could be playing a much larger role in setting up the platform to grow into Southeast Asia for most fintech companies. And I do see the potential, especially across the population, significant in terms of especially direct-to-consumer products.
Neil, digital content, and you're big in Southeast Asia. So, and we know that the banking customers, so-called, who have the access to the banks, who have the debit and credit cards, are significantly lower than the Western world. So how do they access the digital content without having those debit and credit cards?
Sure. Yeah. So, the fact is that card penetration and card usage in Southeast Asia is exceptionally low. The latest numbers that I've seen are that across Southeast Asia, this includes Singapore, but obviously Singapore's population is quite small relative to the total. You've got about a 4% credit card ownership rate. That is exceptionally low, even compared to some of the other emerging markets that we serve. So, if you look at Latin America, if you look at Russia, if you look at the Middle East, that figure is something more like 20%. still really low, 1 in 5. But Southeast Asia is distinctive in the incredibly low rates of credit card penetration combined with relatively high GDP per capita, right? So there's a bit of a mismatch there, and there's lots of interesting reasons for why that is, and we can talk about that if you want. Really coming down to sort of banks incentives to issue either credit cards or Visa Master enabled debit cards. But the fact of the matter is, in Southeast Asia, we've got hundreds of millions of consumers who are pretty solidly middle class. They've got disposable income, but they don't have a card. And so, we think it's really crucial for any consumer-facing business in Southeast Asia to grapple with that. Certainly, if you look at e-commerce, for example, for many years, and I think this is probably still the case, although I'm not sure, for many years, the #1 payment method for e-commerce purchases in Indonesia was a bank transfer. That is an ingrained customer behavior that poses big challenges for foreign companies that are coming in who don't understand these dynamics. And so, I mean, that's what Coda does. We specialize in serving publishers of digital content, intangible goods, and kind of helping them to understand the ways in which payment flows in Southeast Asia are kind of radically different from really anywhere else in the world, and kind of helping to give them the scaffolding and the infrastructure so that they can collect payments in the way that customers want to pay. What's really interesting about this part of the value chain, as I've alluded to a couple times before, is that we start to see movements and trends in payment behavior. The decline in payments with cash on account of coronavirus, the gradual increase in the share of payments that are being made through mobile wallets. So, we are lucky to have a little bit of a kind of bird's eye view of how that payment behavior is evolving over time.
Thank you very much on this one. I was just scrolling through the questions that are coming from the audience. Anand, if you may, the myth that people are required to be in the office to run a digital business was completely debunked. So do you see, I mean, we here are in a webinar rather than in person having a session there. So how do you see the effectiveness? How do you see the output coming from this? And do you think this is to stay, this is going away? What are your thoughts on that?
I mean, we don't know the future, but one thing though that, we realized is, a lot of us work from headquarters in San Francisco, and it was fairly efficient, right? So when we suddenly had to go remote, we were pleasantly surprised that our business actually was able to keep up the pace with all of us being remote, right? And this is probably true in most places. And if you're a digital business most of the time or 100% of the time, it's more so true that you can operate a business fairly well if your customers are all coming online and you're able to make most of the decisions online. And if your data is, or data or processes are cloud-based, it is very efficient. So there will be, I think there will be a rethinking on a lot of different angles. This is my personal view. One is companies will be thinking about how much office space they would need or how many people would actually need to come in versus can work remotely. Secondly, I think employees themselves will kind of evaluate, what's it value for them in terms of having the flexibility to work from home, and which companies will value that, so that the employability factor and the premium on good talent will change over time. And companies will have to give flexibility. If the big companies like Google and Facebook and those guys are going to make changes permanently, there will be an impact on the rest of the fintech industry, right? So we'll have to wait and see how those things turn out, right? Last but not least, I mean, it just says that, you can look at business models that are a mix of, being in office versus, being able to work remotely as well. So I don't have a specific answer, but I think things will evolve over the next 6 to 12 months. It'll be interesting to see.
Any other thoughts, Neil, Kelvin? If there's another one coming from the audience. Blockchain, is it a hype or hope? The particular question is about the Chinese government launching the digital currency also. So I would like to open it up for your discussions. What do you see? I think in lending also the blockchain can play a role, and crowdfunding as well. So any thoughts about the blockchain technology?
I mean, I personally haven't seen a large scale adoption on the lending side, but the promise is there, right? I mean, if for example, loans can be sold in a much more transparent manner and real time using blockchain, that's of value because you get pricing and clarity very quickly, and multiple people can participate, using a digital currency, for example. But I think execution of that and regulatory compliance around that is quite massive. So it will have to evolve itself, and I think it will take some time. That's my personal view, at least on the consumer lending side of the equation.
For similar views as what Anand has shared, high potential, low utilization now. But interestingly, MES has been working on this project called Project Ubin, whereby through a public-private collaboration, they are actually trying to get some bigger anchor players to start using it. So far, we have not seen how it would actually make our products faster, cheaper, better at the moment because of low utilization or environment or market adoption. But MES is a way of making things being adopted quite well. So we are if anything happens in Southeast Asia, it's probably going to be driven out of Singapore, and we're looking forward to it.
Neil, do you have something to add? Or?
I can just add that, from the point of view of Coda, we've experimented with adding cryptocurrencies as payment methods for our publishers to use to collect payments from their users. We haven't seen much traction or uptake from end users. It's something that we're studiously kind of neutral about. If we start to see adoption, that'll be a payment method that we add support for. I do think, what kind of glimmers of traction there were back in 2014, 2015, kind of ran aground against some, I would say, regulatory hostility towards cryptocurrencies. Seems like that's changing in Singapore. I'm not sure that's changing so much in the emerging markets of Southeast Asia. Time will tell.
So this is, I think, the topic that comes up in every fintech forum. And being a part of the academia also, I'm associated with 2 of the universities. And for the last 7-8 years, even the students come up with this question saying, hey, what do you think about the digital cryptocurrencies and blockchain? In my view, we are still, take an example of social media. There used to be MySpace. And then took some years till we have another one, Facebook. And so in my view, we are still living in the MySpace world of blockchain, crypto, and digital currencies. We still have to see the full innovation, full impact, full inclusion from the consumers as well as from the governments, because one of the things is whether it's federated or not, that kind of stuff. So that's one thought process, that we are in the early innings of cryptocurrencies, digital currencies, and blockchain. A second thing, interestingly enough, when a former colleague of mine who's in Korea, he saw the announcement, he reached out to me saying, hey, I want some advice of a company who's, I think, in Belgium or one of the countries in Europe. they're doing lending based on blockchain and they're not being very successful. So what are your thoughts? And my simple reply to him was that, you know, blockchain is just a platform. It's just a technology. Focus should be on solving the consumer problem, the customer problem. If you are solving the customer problem effectively, any technology will do the job for that stuff. So focus on reducing the friction, focus on delighting the customers, and focus on getting the customers from point A to B where they want to be, and the technology will fall in place automatically there. So that's my view on the blockchain side. Now I have one more question, which is, I think, very, very important, because that has been asked from the audience, many of the people in the audience, is that what kind of advice you would provide to the people who are listening here, who are seeking to enter fintech as entrepreneurs, as students, as seeking career change, as an example. What are the opportunities both here in the US as well as in Southeast Asia and in Singapore? So Neil, you would like to go with that?
Sure. My first piece of advice would be, please apply to Coda Payments. We have a huge number of roles open and very ambitious hiring targets for the coming year. We're headquartered in Singapore. We have offices in 15 other cities around the world. So if you're looking to make the leap into fintech, we'd love to hear from you. You know, I'm guessing that sort of a subtext to this question is, how do I get into fintech if I'm not already there? And I think certainly in Southeast Asia, I'm less sure about the market in the US, but certainly in Southeast Asia, I don't think that's a barrier at all. We don't have thousands and thousands of experienced fintech professionals running around. It's not the case. Most of the recruits that are joining Coda are coming either from tech more generally or even sort of further afield, and are bringing functional experience, whether it's in sales or marketing or whatever the case may be, and finding a lot of value to add at Coda. So I think there's lots of ways in, and there's just a huge kind of supply and demand imbalance that means certainly at Coda, and I think a lot of other companies like Coda, we're really keen to help people make that transition.
Anyone else wants to add anything to this question?
I would just state that, you know, if people are looking to say, how do I make the transition? I really don't think you should put yourself as a barrier to say, I am working in a traditional industry and it's difficult. I think you should not even think about it. The only thing I would say is you need to be able to clearly be open to questioning everything that you have done in the past, and you need to be able to work at different levels, right? And in other words, you need to be able to work at the ground, you know, in terms of getting things operationally done, and you need to be able to work at the strategic level and trying to figure out where the path takes you to. As long as you're able to do that and you're willing to bring the experience from the past, just don't, you know, it's an iterative process. It's highly iterative, and you need to be able to be open to continuously question and iterate and figure out what the new means is. And as long as you apply yourself, I think you'll be successful. I don't think it should be a barrier.
Maybe one or two things to add on. The first is that I think timing is extremely important. I think so, given that's what Neil said about there's a short in fintech talent in Southeast Asia, I think that's very, very true. For example, but at the same time, I also reckon that I think a few years back, if you do not have any fintech knowledge whatsoever, frankly, you'll be hired by any fintech companies because there's no fintech talent at all. And we kind of trained the first generation of fintech product managers, because before that, product managers were also a pretty new concept in Southeast Asia. So you intercept product managers and fintech together, you find no one in Southeast Asia, and we kind of train the first batch. And hence now, when as the market matures a bit, we kind of expect that, hey, the PM should have a bit of experience there because the pool is becoming slightly mature. But I agree with one of, I think it was the CEO of Microsoft, whereby I find that when hiring people, we sometimes over prioritize CVs and under prioritize intellectual flexibility. Hence, to Anand's point, I think that there are a lot of folks that, even though they are trained, but they can't think out of the box, they can't experiment, they are quite set in their ways. And actually, that is very much price, at least in funding societies, we price a lot of under the iceberg factors more than perhaps, or more or equal to the above the iceberg kind of characteristics of a person. Because we find that the success factors are actually oftentimes determined more by the under the iceberg folks. Hence, when it comes to culture fit, hence when it comes to intellectual curiosity, I think those are extremely important. And at funding societies, we're still hiring, especially in the area of engineering as well as data science. So if anyone is interested, reach out to us, fundingsocieties.com. Sometimes I do reply to the chat bot there or on the website, so you may reach me directly. If not, my team members will actually forward that to me. Or alternatively, you can go to LinkedIn, Kelvin Teo Funding Societies. There's probably only one of me there, so you should be able to find me.
I think we can have a healthy competition in terms of recruiting here. And this is a good thing. This is why SGN is here. So I think all of us are proud members here of SGN. So I would like to also add that SVB is hiring talent in the fintech at all levels. I think probably we have over 100 positions open. So please do visit our career website to look for opportunities, and you can connect me through SGN or through LinkedIn, and any guidance we can provide offline also, it will be an honor. The other thing to add to what Kelvin was saying, I would like to add is, first 15 years of my career, I was in the broadband. You know, all the pipes that we have, thank God we have those pipes that we are able to do all kind of Zoom and other conferences and so on. I was in that space. And then finally we sold the company to a private equity. And then I decided, hey, I have to get myself out of the comfort zone. And I decided to go in the fintech world. So it's been 10, 12 years of fintech space. So I had the same dilemma, making the change, coming from a very senior position and trying to get in the new space. But I think I'm pretty satisfied, pretty happy with the transformation. So have faith in yourself and take a leap. This is a really growing area. We cannot find enough people, 3 or 4 of us testimonial to hear that we're trying to hire, we're not able to find people. To the extent that 6-7 years ago, Santa Clara University and UCSC asked me to start a course on fintech and mobile payments and so on, because we are not getting enough graduate level students there. So there are many resources out there. Please do utilize them, and any guidance 4 or 5 of us can provide, we will provide to you as well. So now we are almost at the end. So maybe a 30-second lightning round. Any final thoughts from our panel members?
You want me to start?
Go ahead.
Yeah. First of all, because everyone put in a pitch, I would say for the US folks, if you want exciting career, you can go to SoFi.com and careers and kind of check it out, right? I would say that, for the Singaporeans and especially people from Southeast Asia, when you're looking at it, there are more than 3 billion people in the region. Okay, if you add up the countries, 70% or so are below 35 years of age. It's one of the best population segments for fintech, and it's ripe for fintech, quite honestly. I would say that, if you want to start, if you want to participate in the fintech economy, it's a great opportunity. And I think you should take advantage of it. And this is the time to kind of launch products and services that really appeal to that segment and in that area, either through partnership or through homegrown solutions. Either one is fine, but I think it's a great opportunity for people to advance in the financial services and take advantage of the products and services available.
Thank you, Anand. Kelvin, any final takeaway, 30 seconds?
I think fintech in Southeast Asia is at a very exciting juncture, whereby there are market leaders that are emerging within each of the vertical, yet at the same time to provide a stability as well as growth opportunities for talent, but yet at the same time it's still relatively early, such that there's still quite a bit of growth opportunities. And it's also at an inflection point whereby COVID has prompted quite a bit of digitalization and government support to actually to drive the next phase of growth. And at the same time, having certain level of market evolution by virtue of the digital bank license in Singapore, of which Funding Societies has applied together with Xiaomi, SP, as well as AMTD, and more similar opportunities are coming up with virtual banking in Malaysia, so on and so forth. So I think it's a very exciting time. If you are Singaporeans based in US and who is looking to come back to Southeast Asia, this is I think this is the right place at the right time. If you wait for another 1, 2, 3 more years, frankly, I think some of these opportunities may be a bit more mature because others will have taken up, and the competitive advantage of having a US experience, yet local Southeast Asia understanding may actually gradually diminish. And it's also partly why I came back from US right after my MBA in 2016. So anyone is interested, fundingsocieties.com, look forward to catching up or connecting with more of you.
David will keep track how many hires happened through this webinar. Neil, go ahead. Final thoughts.
You know, I agree 100% with what Anand and Kelvin just said, so I think I'll let them have the last word.
Great, excellent. I see the innovation dots on the horizon that will converge in the next 12 to 18 months that will expedite the future of fintech. I would like to thank Anand, Kelvin, and Neil for taking time off to share exciting developments in the fintech. I would also like to thank SGN and EDB for helping us bring those together. My special thanks to David, Regional Director of SGN USA, for hosting this forum. And finally, I would like to thank the audience. We had over 200 registrations, and I saw about 160, 170 people joining at some point in time. So I'm sure all of you also benefited with the discussion we had today. We have a series of webinars planned on various topics, so stay tuned for the next announcements. And stay safe. Thank you and goodbye.
Thank you, guys.
Thanks, everyone.
Thanks, bye.
Thanks, everyone. Cheers.